Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Marty, good morning. Thank you. And how we doing in YouTube? Are we okay? Okay, let's get going today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There is no cost for the Trader Lab. It's a group of like-minded traders who come together to leverage their collective experience. There's a lot of work to be done, data mining, research, working on structured trades, mutual support, and this is an advanced trading process. And it doesn't matter how long you've been trading. It is really more about understanding the business you're attempting to be in and designing plans that are in alignment with the business model, using a proven business model as a track to build trading on top of. And is really the trading business is 100% random in the sense of the outcome of any specific individual interaction with the other participants. But just like gaming or the way casinos operate, they only play games that have an edge. And because they have an edge, even though they still pay the gamblers over time because they're disciplined, they don't change the game. They only interact when they have an edge. Because that edge has a probability that favors the house, they extract the dollars over time in a random environment because they don't control the outcome in the sense of the cards coming out of the deck or how gamblers play the cards. And it's important that you understand the business you're trying to be in. This is not a business of confirmation and predictability, though wouldn't it be nice if it was? It's really a business of randomness with edge. And if you approach the business from a statistical viewpoint, you can better understand how you can manage yourself in a random environment because it's not about confirmation and being right. We're all fearful. We all don't know what's going to happen. We try to build solutions that give us the conviction, the confirmation, and confidence. But if you're in a random environment, you're, in my opinion, at least from my experience, and it's gone on 46 years, we can't accomplish that in a random environment. We can only accomplish edge. So if we switch our focus from prediction and being right and all those emotional, psychological needs, and we switch it to actually the business we're attempting to be in, I think potentially that might give us the ability to create sustainability. And of course, everyone's outcome is random. You've got to do the work, but you need to be in an environment where there's mutual support and potentially traders who have gone and walked in the same shoes as you have, just like I have, and have come to the realization that curve fitting, tuning, tweaking, and waking up with the same outcome in spite of having winning trades, because anyone can have a winning trade. Gamblers have winning hands, right? So it's the winning that keeps us looking to make it better and create more certainty. But suppose that's not the right direction. That's the question I pose to you, and the solutions, in my opinion, and of course it's not for everybody, might exist for you in the Trader Lab, and you're all invited, and there is no cost. General disclosure, all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please grab a pen and paper. I'll give you a couple statistics, but we're going to go over higher time frame. Now, higher time frame, what's that all about? Right. By the way, this is what the structured trades look like. It's in the library of, and these are trades that I put together. Some of them are my own shall we say, real-time trades. Others are just screenshots. These are put together like almost 5 years ago. I'm not a vendor. There's no cost for this. Traders were asking me, what are you doing? And other than the days when I ask myself what I'm doing, which when you're in randomness, our nature psychological is to question ourselves because in hindsight everything is clear. But the reality of our business is there is no certainty. It's random. So we need to solve for that. Now, this is previous to yesterday's RTH. I want to show you the auction. And those of you who are not familiar with volume profile or the market mechanics, this is the basis of understanding how the market works. Now, all of us start out with indicators or some derivatives. And what is an indicator? It's really a measurement of price or some derivative of price. It could be whatever. However, they're not context specific. They just follow price around. What would it mean to you if you actually could understand why the market does some of the things it does? Now, like everything in trading, there is no precision. It's always random and it's always maybe. If you're an accountant or an engineer, you're going to have to kind of loosen things up because there's a lot of slop, and the slop is created by momentum. So if we have stops or a level at a particular level, you know the market will go through the stops until those orders are taken care of. So that's why you can't put a line on a chart and say, yeah, it's a brick wall. There are no brick walls. There's always an only maybe. Write that down. What do we have in trading? Maybe. Maybe it'll do this. Maybe it'll do that. And the other thing is where might, which is another form of maybe, it happened. And then if it comes to an area, does that allow us to anticipate potential behavior? And I have coined a term called you got to anticipate, participate, and then act accordingly with a vetted, structured trade plan. That is all done outside and prepared before market hours. And basically you bring yourself and your plan to the market, and then you allow the market and the participants, which is really what the market is made up of, to determine what your action will be based on knowing you have an edge when that condition shows up. And like everything and everybody, and even casinos, we will pay the other participants. We do it with a stop to protect our account. They do it because they know when they play the games, they have to pay the gamblers to extract the dollars. Can you adjust your mentality to understanding you're in a gaming business and you are going to pay the other side? You must pay bills, and that's called cost of production and overhead. This yellow line is the highest volume from over here. And if volume is high volume is the retail price, and we reject it, and then we do all of this down here. If we come back to it, why did we reject it in the first place? Well, it's too high. So to give you an idea, this day was too low. This is an intermediate time frame volume. In this day, this is the retail price. In this day, this comes up and checks this volume, too high. And then where do we go day before yesterday? We check what is too low, and we get close to what is too high. You notice we're here and here. Now the retail price day before yesterday is here. Now let's follow this. These are higher time frame or intermediate time frame levels. Now this is what I just showed you day before yesterday. Now let's remember, too high, too low. So if you're trading this day with a plan, you're targeting this and you're targeting that. Now what happens? Yesterday we opened lower. Where do we go? Right to the tick, right here. And what do we have down here? If we get below 01, we have a breakout of a consolidation, and then we potentially can come here. Not a recommendation. We can also just get the 68. But given its FOMC, things you get, as they say, interesting. Not a recommendation. Now, I'm going to just take you into a little more depth here. I want you to see how levels work. Top end of a consolidation. This was too high. Over here, retail price, too high. No precision. I come down, too low. I come up, too high. And there's no precision. It's ballpark. Horseshoes and hand grenades. Too low. Open lower. What do? Too high. Where am I? Retail price. And now, what happened today? ETH high up here, and ETH low just over yesterday's low. What does that tell us? If this is still too high, then potentially we can come back here. And if we get under here, it's put the helmet on, use a parachute, and potentially down here. And that's not a recommendation. The market doesn't have to do anything. The other thing you need to be aware of is that we have a lot of fundamental inputs, tariff news, FOMC, all this kind of stuff. So if when news comes out, it scrambles everything. And the reason is this is an auction. And the market's trying to figure out what's too high, what's too low, and it does it in all fractals and time frames. If a news input comes in, it distorts the market. We get these huge whipsaws. Everybody gets skidded on their stops. We all get, and that's trading because it's, what is it? Random. So random inputs distort or disrupt the auction, because the participants then have to take that new input and auction it to determine, does it change valuation? For example, if the Fed cuts interest rates, we'll get a rally in the market and a big short squeeze. If, or if a trade thing comes out, where they've reduced tariffs and we're seeing progress on that, we can get a squeeze out of it. So all those are inputs that disrupt. And then after the dust settles, does it change the valuation or is it just a squeeze? And then we go back to where we were. All of those are possibilities. So we're not in the business of predicting what's going to happen. No crystal ball. What do we have in trading? Maybe. And the other part of it is, hold on one second here. We have maybe, I got to make sure my levels are in here. One moment. Okay. So all you have is maybe, so then it's trade plan. Now, let's look at before the open. If you're in Trader Lab, this is kind of what you'd be doing. You'd be looking at the conditions of the market. You'd look at yesterday's RTH. You'd look at the ETH, which is the most recent auction. And then you'd be looking at something called the value area. This is yesterday's naked volume point of control. Remember, the yellow lines. What does the market tend to do? Checks the retail price. Trading is shopping. And at least that's how I relate to it. If you go to the store and there's a retail price, high volume, that means that buyers and sellers are willing to do a lot of business there. So it's a fair price. If I open at a different location, I have the potential to go back and check. If I open above here, I can come back here. I can also go to the ETH volume point of control, which is up here. Now, I'm not going to spend time on this because we don't have time. And this is a potential target. So what this is called is mean reversion. And I'm going to be operating in multiple time frames or fractals. And the best way to consider or think about this behavior is Russian dolls, Matryoshka dolls. When you think a multiple time frame, they're inside each other, right? Well, a Matryoshka doll is a vertical representation of the same thing. Well, that's what we have here. It's vertical. So higher time for intermediate time frame, however you break it down, daily, and then fractals. Fractals are not time-based. They are auctions inside of developing time frame. So when I get into a developing time frame or RTH development, I'm no longer using the clock because the clock doesn't control this. It's the participants. Now, I'm not saying you should not use time-based charts. Not my business, it's yours. But I will say to you, what does the clock have to do? Do we put the market in the box, or do we let the participants auction the market and tell us what might happen? Now, here's the context. We're opening in range, in value. What does this mean? I think I lost, where's the RTH open? It's got to be right there. So the value area low is where 70% of the volume between the value area low and value area high, 70% of the volume took place here. The retail price is down here, which can act as a magnet. So we can do anything in here. So the first thing is when we open in range in value, the market is in balance. That means that not much has changed, except this is settlement, and that's yesterday's highest volume. So the market can slosh on both sides. check the edges, value area high, value area low, and this. I know that. However, now let's look at the first trades. Now remember this, everything I discuss here in the stream is based on structured trading. That means trade plan specific, and the trades are not mechanical. Most of us start out in this business and we think it's plug and play, and a line crosses over or a piece of spaghetti hits the wall and it's push the button. If it was that easy, everybody would do it and we'd all have ATMs in the basement or a bank. So think about it. Maybe that doesn't have an edge. Maybe even with the winning trades, all you got is maybe, and all you have is randomness, and all you have is no edge. So if you're trying to create edge, even though you have winning trades, but if you don't have one, you're still going to have winning trades and you're going to still potentially lose and put yourself out of the business. I think that's happened to most of us in our development. Has that happened to you? Give it a thought. Ask yourself why, and what might the answer be? More of the same? Or maybe you're trying to solve for something that's not solvable. That is, create certainty and eliminate randomness. This is called VPOC migration. Now, this is not a qualified trade when you open in balance. And I also say in the Trader Lab, the last place you want to develop a trade plan, and it is a separate plan, is for the open. There's no structure in the open except this. And what happened in yesterday's RTH, we're in balance, and what happened in the ETH. ETH retail price above us, yesterday's RTH below us, opening in value, slosh. So this is a high risk short, and it's a trade that somebody could take if they are highly skilled and proficient, but they have to have the other parts of a trade plan worked out. They need to be profitable. They need to have an edge. And also they need to research this and also develop the discipline not to trade it. Now, if you can't restrain yourself, that's FOMO, and that's going to take you out of the business. Now, let me give you some statistics, as I said I would. And all this is in Trader Lab. We are opening in balance. There's settlement, so higher inside of yesterday's range. Remember, yesterday's low is below us somewhere. There it is. I'm sorry, that is not it. Come on, there. And the ETH low. We have over a 90% probability of taking out either the first hour's high or low, which is called the IB. And we also have about a, let me find it here, 80%-ish probability of taking out either previous day's high or low. Considering the way we're leaning, I'm going for this, but that's not a recommendation. Clueless. Is everybody with me so far? If you got questions, post them. I'll do my best. But if you want specific answers, since my time is limited, if you're visiting in YouTube, use the link down there. Visit the Bookmap Discord Trader Lab. There's no cost. You do have to verify that you're not spam, so which is nice. So you don't want to have that, so we need you to verify. You won't be solicited. You don't have to be a Bookmap subscriber, and it's just a matter of keep the community clean. So I hope you're okay with that. By the way, please give a like. Now, this is called VPOC migration. Now, the issue with this is balance. Now, when you're in balance, and this is, again, anything I'm suggesting here is random. So it doesn't mean it always is. It means what? Maybe. This is the opening swing high. So what did we have? Where are we opening? Well, we're opening near this, and we're opening near settlement. So there's a probability of getting to settlement, about 69% probability. So, and a 67% probability to get there. How do you sort this out? Well, they're not predictive, but when you aim the barge in a specific direction, you are aiming for statistical probabilities. Remember, the business is gaming, so we use statistics. Now, let's look at this. When the market opens in range, in value, even though we got this and this, which might be a viable target, we also know that if we get sellers early, that the opening swing high is right here. So the first thing I'm going to be thinking about is in a two-sided market, and nobody knows. Remember, it could, do anything. So our job is not to say it's going to. Our job is to say it might. Because we don't know when we get this selling if we're going to get here and here first. But we also know opening swing is here. And what's going to be here? The sellers in this leg have their stops here. Now, let me keep going. This is called a variable high volume node. I wish I could go faster. And you guys need to let me know. Do you need or want me to go over the higher time frame structure so you know what we're trying to do inside of it? Or you want me to skip it and just get, I don't know how it would provide you value unless you know why. This is why I go over what's happened, even though I really like real-time narration. And by the way, if you want to see real-time narration in the Trader Lab library, and there's a library of webinars in addition to those 60 PDFs of structured trades that I share, and they're broad strokes to help you build the business. And they're not mechanical. This is not a mechanical business. This is a business of alignment. So right here, this is the retail price. Remember, high volume. It starts at 0 at RTH open. If it's too high, I'm not paying that. Boom. Mid, VWAP, VPOC migration. I made this up. I did a specific webinar on it when I was first learning this stuff. And that was, when was it? Mid-80s. But this was something I kind of came up with. And I kind of found it really interesting because it's a language. So if I don't use any indicators, in the standard sense of how you guys use them, I don't need them because this tells me everything I need to know. It doesn't tell me anything different. I still take stops. You take stops. So, right? So if that's the case, this is saying too high, too high. This is a fractal. What was I saying at the top of the stream? Retail. Maybe too low. And what about up on top? The overnight VPOC, maybe too high. We can check either one, none, right? So in the microstructure, too high, too high, too high. This is a potential aggressive short, and the risk is high because we're opening in range, in value, and that suggests balance, which is two-sided trade. Opening swing high, stops. It's a high, not a low. Losing my mind. And opening swing low, it's going to be wherever that shows up. So, and I think it will be here. So if you took an aggressive short, you have, in this context, you got to be on this thing with very aggressive trade management. And again, I always say, developing traders, this is the last place you want to even think about trading. You want to always narrate it. What does it mean? So too high, too high, too high. And as long as I'm under these, I'm going down. And statistically, these are high probability. It's a very aggressive trade. And I'm not saying anything other than it is an aggressive trade. Now let's look at change. VPOC migration. Going to 0, Lewis. Liquidity in the book. Some buying iceberg. Sell stops coming out. Lovely. Watch. See? So right here, we have change. And when you cross over this, if you took a short here, you have to try to get risk neutral. And if you don't enter well, and I think for me, if I'm taking this, I want more range, but I wouldn't take this trade. So I'm just saying. And because my plan says it's high risk, and I know where I'm opening. I'm opening near yesterday's low, and there's shorts in the market. Write this down. The market goes up to go down, and the market goes down to go up. The market goes down to go up. Does that make sense? So let's look. Too high. Too high. Sorry, Charlie. Remember Charlie the tuna? As soon as you come across this, these guys are on the chopping block. And this trade, if you took it, would be over. Now let's look. The buyers are in control. Now, let's watch this level. Remember, the old concept that this astute group of traders understands. Support and resistance. 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 Support. VPOC migration. Support. VWAP mid. Notice that the VWAP and mid are moving up with price, which is what you'd anticipate, and this is now too low. Now, this is dynamic. What that means is it's developing, it's always changing. And in the Trader Lab, what our job is to narrate the market and with our trade plan have defined what change is. And the way I figured it out for me when I built trading systems, the algorithms, we didn't call them algos back then, but it was an algorithm, was conditional statements, which then opened up a branch of logic. You know, if this, then that, then you do that. You know, if this, then that. If it's true, then what, right? So it was, so if this is too low, then that. And if I hold this, then what? Then north. If not, then what? Back here. You see? So let's look. Variable high volume node is here. Variable high volume node is here. So let's watch this. Now, in this, I'm trying to remember this. I'd have to look at my, so this is still in the open, okay? And in balance, it's a two-sided trade, okay? So right here, you took the stops, you come up. This is a selling trigger. Now, the problem with all this is when this migrates up, now let's look at the change. The market comes over here, it's too low. If this becomes the retail price, what we want to see happen is we want it to bounce off here. It does the opposite. Break low, test. If too high, then back here. This is two-sided trade. It's a specific plan, and I don't like it. It's not my thing. When I say it's not my thing is two-sided trade requires a specific plan with specific locations, and it's easy to get bounced around in this because you're trying to pick out side edges. Now, in this configuration, when we break under here and test it, it does set up a short, and there's your target. I think I took this, but I can't remember. See the behavior? And then you're coming here. And then the idea would be to come out under here. What do? We take this, look how we're sloshing around, just to give you an idea. Take the stops here, come down here, opening swing low, take the stops there, right? Come back across. This is the thing about this, maddening. And then take the stops here. So market goes up, they go down, market goes down, they go up. Then this. Now, this was interesting. We have a high probability, and past performance not indicative of future results. So let me give you the statistic on this. Getting to the ETH mid is about a 72% probability. Now, if you're using an order flow tool like Bookmap, what do we know? Probability favors along, and this right here is our obstacle. Statistical probabilities, and the full session VWAP was aligned. Is that correct, guys? Just confirm that, because this moves around and it's still moving. So I don't know if this was accurate at the time. Was full session VWAP around 50? Trader Lab? Yeah, okay, thank you. All right, so we have a trade, and this gets a little advanced, but that's okay. It's called VWAP to VPOC, which is here, okay? So I have, and again, I'm in two-sided trade. Remember the context. This is the number one driver of these trades. VWAP to VPOC, liquidity. Now, let's look at this thing. Buy sweep, And I was discussing this in Trader Lab. I do a lot of posting in the Trader Lab. I wear a headset, and it just does voice to text because I also am a full-time trader. Obviously, I'm not trading at the moment, but this sets up a trade for me. I have location. I have a sweep. Now I need a trigger, and my target is below. Notice the liquidity. Selling icebergs, buy sweep. Watch. This is a trigger, and this is a structured trade. Someone in Trader Lab was asking me to show triggers. This is a trigger. Let me show you. Now, I'm doing this in a couple different ways for you. I'm obviously, order flow is where the edge is, but the result of order flow, or the output, is price action. So you can use price action until you get proficient at reading this. For me, I can enter in here, but if you're trading structure, you can enter there. And for me, my stop needs to be up here. And where am I trying to go? Here. Actually, here for the scale, and then here. This is a price check. So if we come down and I find my buyers here, remember shopping, in the microstructure, too high. I'm not paying that. VWAP to VPOC. Possible buyers. Let me show you the retail trader behavior. Retail traders, no offense to us, are lemmings. They all do the same thing. They're mechanical. I understand it, and they win. So I'm not knocking them. But I anticipate behavior because I used to do the same things you did or do. And that is buy sweep here. So I'm seeing a buy sweep, okay? And I get the mechanical traders, VWAP and mid. But I know if I get buyers here, the possibility is I come back here and get taken out. They bought the ticket and they won their lottery. Or these buyers are going to become sellers when their stops get taken out, and then I'm coming back to retail. So this is a short from there to there. And then trade management. Where am I trying to go? Back here. Who knows? Let's see. VPOC migration. Right here is trouble. And here's the trouble. This might be too low. Here's the VWAP in the mid. These guys failed here. I need to stay under this and take this out. Watch. Trouble. You see trouble? Can you recognize trouble? If you're in Trader Lab, you cannot predict anything. I mean, none of us can. But what we can do is understand change. Now, what did we find out over here? This is too high. This was retail. We come down here. Target. Lovely. Now what? This now shifts up. What does it say? Maybe this is still too low. And if it shifts up, if I come here, I need to get below this and get below all this to get down to that one. I need to get below this to come down here. I need to get below this to come down here. Well, I get above it, and then I can't get back under it. Then what? Too low, squeezeteria. You see? Let's just watch now. And there's a little bit more in here I want to show you. This was our resistance, wasn't it? And we blow through the VWAP, and off we go. We're through the mid. Watch. VPOC migration. Going to the moon, Alice. Maybe. Now, statistically, and not a recommendation, you have to vet everything for yourself. This is called the IB30. And Rod in the Trader Lab came up with this stat. Very useful. And what it says is, if we take out the first half hour's high or low, there's a potential, I think, and I always forget where these are. I got too many statistics. I think it's about an 86% probability that we take out the first hour's high or low. And Rod, if you're floating around, or somebody else in Trader Lab Discord, confirm that for me. I have too many statistics. And I don't have time to go rummaging through them all. So I'm doing it from memory. I might be wrong. And then there's a 90% probability we'll take out either the IB high or low. The statistics favors the high, and this is our next target, ETH, volume point of control. What is this? That's the retail price. What's this? That's the retail price from yesterday's RTH. This is the retail price or highest volume from today's ETH. The probability of getting there is 82%. Past performance not indicative of future results. You got to vet it. Now, that's all you got. So now I'm going, oh, okay. Too low, new retail price. And what is this? Let's look at this. Let me bring you back here. First of all, this is our resistance, okay? So this is just, remember, two-sided trade. And hold on a second here. I think I covered something up. Let me just check something here. I got to show you levels because this is what trading the auction is all about. It's levels. It's down here. So we're in value. That's where 70% of the volume is from yesterday. So as long as we're trading value, it's two-sided trade. And like everything in trading, we don't know anything other than what it might do. Then it's trade plan specific. So we're looking for it to come out the top. Now we got this liquidity sitting here, and you'll notice that we had absorption up here. This is like hitting a wall, and you'll notice the liquidity was sitting in the book. So what happens is, if it's almost like hitting your head on a ceiling, you come back to what's too low. So that was a short, nice trade. Then if this becomes too low, we come back to what was too high. But this liquidity is sitting here, and if we're in balance, we can do either one, So this time up, we take it out. Now there's another possibility, counter rotation or continuation. VPOC migration. As soon as this becomes the highest volume right here, this now is a new distribution. So think of it this way. All these little VHVNs, it's an auction. Too high, too low, retail. If it's too low, we leave it and we start this again. And these are represented by consolidations, and they're actually auctions. I'm not paying that. Yeah, but it's on sale. Retail. And then if the shoppers determine this is too low, we leave it and we start a new, and this goes on in micro or fractals, so we can observe it in microstructure and then narrate the auction and see what it's doing. Now, when we rip through here, there's no chop, 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 which is what the auction is. The sellers are here, buyers are here, we'll see you later. When we're doing this, we have the same thing. Sellers are here, buyers are here. But it sets up something on an outside edge called a low volume node. A low volume node is where the market runs away. Let me just get this in here somewhat for you. And that's an outside edge. So at this point, there's no more shorts, it's longs. It's like you got to turn the barge around. This is part of the joy of randomness, and you got to have a trade plan and trade management. We all take stops, we all do whatever. Trade management is not only getting risk neutral, it's how do you manage rotational trading? Because in this condition, you got this kind of thing going on. Once you're out here, now it's longs. You see, it changed. How do we know it changed? Too low? Now that's too low. This was too high, and I took it out. And now my developing volume point of control, where most of the volume is, in the developing daily time frame, this is the price. So how do I trade this thing? Good question. This fast move, it did not chop, 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 chop. So it's not auctioned. So the market has a tendency to come outside to outside edges and then do mean reversion. What we were doing, trying to get over here, was mean reversion. Trading these developing volume points of control in fractals is mean reversion. Coming from here to here is mean reversion. Once we break away from the mean, and now the mean changes to fair price, in other words, retail, then it's mean reversion outside in. So this is your outside now. Now, the other thing to know about this is there's going to be stops out here somewhere. And this is part of the thrill. We don't know. So I posted in Trader Lab, context. How do you trade this now? You turn the barge around. Now you're aiming from the long side. Why? If we take the first half hour's high out, there is a high probability we get here. There's a 90% probability we get there. And then there's a over 80% probability you get there per the stats, and you got to vet everything for yourself. So this is longs going for this. Does that make sense? And you guys have questions, how we doing? Sam, however you define it is great. Okay, yeah, I think I'll keep doing the higher time frame. And Sam, the thing about indicators, what's the trend here? Is the trend up and down? Is the trend down? What is the trend in a daily time frame, assuming you're a day trader? If you're not a day trader, then the trend is what? For me, down. But that doesn't mean anything. I don't trade that. I just trade levels, and I also trade in fractals. So I'm trading in the Russian doll concept, vertical integration of rotations. So you can use anything you want. I have nothing against indicators, believe me. The problem I have with indicators that traders never learn how to trade. They let the indicators do the work. And I can assure you, with the failure rate of traders that rely on indicators, that might not be a good solution, though we all have winning trades with indicators. I'll tell you, when I built trading systems, I had tons of winning trades. And it's still, over time, I was always re-optimizing it because I was curve fitting it. And because I was trying to fix it and make it better, right? Because I said, gee, I'm having winning trades. How do I make this thing better? Isn't that logical? Well, that's how I thought about it, liquidity. So here, I have a 90% probability of this thing, but my resting liquidity is sitting here. This is my retail price. Now, let's look at this. What do we know? Outside edge, VPOC migration. Let's come back to something else that you might notice, maybe. Volume, that's a short. This was too high, this. Okay. We come over it, we test it, too low. What do we do out here? Too high, sweep, to where? The buyers are here, that's absorption. The buyers are here, that's absorption. And this is the outside edge. And this is called mean reversion. Underline the word mean, because for me, and the thing about mean reversion is most of the time, the market is rotational in different fractals or time frames. So we can have big rotations, we can have little ones, we can have this. These are rotations also. Now, the way I look at these is I have to try to get an alignment. And the other part of it is I need range. In other words, the auction doesn't care about what we need for risk reward, to get risk neutral. And I cannot execute on the what do they call it, the head of a pin. I can see the absorption here, and I can see the iceberg the sell stops coming out. But by the time I see a buyer, I can't activate here. But I know this is my outside edge. And what else do I know? 90% probability and the 82%-ish probability for the overnight VPOC. And I also know I got sellers here. And I know this was a sweep, and this is a dangerous location for a long. Let's see. Resistance. Don't know. See what we're doing? Back here. This is absorption. Icebergs. absorption. Let me open this up a little bit more for you so you can kind of see it. Now, the thing about this long, if you took it, let me explain it to you. And this is advanced again, and it's not anything anybody ought to do. Every trade you take you have to know what you will do, not only where your entry might be out here, but this is the mean. So this is called reversion trading. So you would need to deal with this. You got to be able to enter on a head of a pin, very hard. So this was where the buyers were. That's absorption. Why? You see the sellers. Why didn't the market go down? Well, 54 sell stops. Who's on the other side? Well, 46 sell stops. There's icebergs. Passive buyers are here. You don't see them. Up here, I've got my resistance. Buy stops come out up here. I break. I come up. There's a sweep. These sellers, think of it this way. If the buyers are here and the passive side consumes them, think Pac-Man, and the sellers take over, if the buyers come back, are these sellers still going to be in this area? Question for you. How about yes? And if I see the sweep, it suggests then downside rotation. If I get downside rotation, I can anticipate the stops coming out here and possibly coming out under here, and these buyers. So you would have buyers down here maybe and sellers up here. And of course, who knows, right? Where's the sellers again? They're up here. Where's the buyers? They're down here. Where's the stops? Write this down, guys. Think like a retail trader. Don't act like one. Where would you put your stop? There, 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 there. IB high, 9:30 Central Time. Now we have this in. And what do we get up here? Another sweep. So this is mean reversion. Outside in, outside in. Now for this is very difficult. And if you don't have a plan or an edge in this, you just leave it alone. Buyers are here. Buyers are here. Now here, no clue. Here, you got the VPOC. So now it's mean reversion, mean reversion. And I think we picked off these guys, right? Yeah. The stops are under this swing, retail trader behavior. 120 sell stops come out. All they did was, I think, one tick or two tick this low, and then it sets up back to here. It's outside in. This is reversion. And if it doesn't have enough range, you got nothing to do. Sweep again. Now we get this, and now it's 9:30. Over 90% probability after 9:30 to take this out, and this is our 82% probability. So as far as I'm concerned, this is it, and it's trade management, and the trade doesn't fail until under here, out here. So now this is time frame oriented. You might have your stop out here, and you're just going for this, and you're working on your crochet. Or, and let's just see, because nobody knows anything, VPOC migration. New retail price. What's too low? Follow the yellow brick load. This is now too low. Looking good. Feels good, Lewis. Watch. Now, guys, if you're looking for prediction, wrong business. It doesn't exist. Right up here with the sweep, the buyers are here, the buyers are here, the buyers are here. We have a sweep. Liquidity comes in the book here. Now, there's no way to know anything, and no, and you can't. I can't. Maybe you can. If you can, come to Trader Lab, straighten me out and everybody else. But in the meantime, what I do with this stuff is I look at it and I narrate it. I'm going, well, what does it mean? What does this mean? Why did this happen here? I get the sweep. The liquidity is here. No clue. Buyers are here. Buyers are here, buyers are here, buyers are here as far as I'm concerned, going north of the border. I break here and I come back here to my current retail price. So let's look at the behavior. Buy sweep suggests counter rotation. Sell sweep into retail, and it can do anything, suggests counter rotation. I come back. Now the liquidity comes in here. Come down. VPOC migration. What do I want to see? This. And what else do I know? Too low. Support. Now this becomes potential support, support, support. I come down here. All good. Looking good, Lewis. Where's my resistance? Here, here, and this liquidity. Liquidity is still in the book. And again, no clue. Remember, clueless. This is where trade management comes in. And then what do? We fall out. This distribution is too high. We reject it. Everything changes here. Now it's shorts. And where are we trying to go? Nasty, isn't it? Where was our stats? Here, right? To check the retail price. We take the first hour's low out, totally opposite of what the statistics suggested. That's why statistics are a piece, but you got to narrate it and try to stay in alignment. So once this falls out of this is like your auction. Oh, it's on sale. Retail. I'm not paying that. And of course, this is retail from ETH, the target. As they say, c'est la guerre. Thanks for playing. And this is when you get a coupon to the buffet. Now, low volume node, breakout, failure. What do we do now? It's short. So let me show you. This is what makes your teeth chatter and you kind of beat yourself with a hammer because of randomness. The solution to randomness is trade plan and narration, so you can understand and define change. Now, until this happens here, right here is another potential trade. Right here, VWAP to VPOC. But what happens here, and this is structured trade, but it doesn't happen. You know, it's like where I don't have a trigger here. In fact, it sets you. Now, I don't have a short here. I don't take a short here. I just say forget it. Now, my next trade is called the IB continuation trade. At 9:30 is the first hour high or low. These are structured trades. Liquidity is sitting here in the book as I come down. And I don't have any way to get into this, at least a structured trade. I have other ways, but they're not in Trader Lab. Watch this right here. This, we have a structured trade called the IB continuation trade, and this is a target, as is yesterday's value area low. These are all viable targets. And if I come under here, it's possible I'm breaking out of balance. And if that's the case, I want to be thinking about shorts only and trade management. This is an advanced concept in Trader Lab right here. Break through this. That means there were buyers here. There they are, the icebergs. And now my sellers are below. I have my IB continuation trade right here. Look, I'm going to put a little box around this thing so you could kind of just see it. And when you're working on a trade plan and learning market mechanics, this is the kind of stuff you ought to be doing. What does it mean? See, it's about what does it mean? Break here, pull back here is a potential right here. Let me show it to you. This is your resistance, okay? So if I break here, I'm going to look at this profile, and what is this out here at the time? This is an outside edge. It's a low volume node. I'm doing the exact opposite of what I did up on top with an outside edge. Now, the range is very tight on this thing, and you have to also understand where resistance is here. So I can do the following. I can come out here for the IB continuation. My resistance now is here, and I can also push up here. So it's there. Let's watch. So this is my resistance, remember. And what we had was buyers over here, and the sellers overwhelmed them. If we come back up here, we might find our sellers again, or we might not get there, and we might be selling in here. And it's the opening swing low, remember? Stops under the opening swing. So right here, my liquidity comes back in, and I've got my IB continuation trade, structured trade. Let's see. This is a structured trade. You can learn this in Trader Lab. It's in those 60 PDFs right here. So this is my resistance. These guys come back in. That's why this is marked. And this drops down and drops. And more comes in. Buyers are here. Buyers are here. So if I took a short here, my stop's got to be over here. If I get short here, and these are triggers. This is a trigger. This is a trigger. There's the liquidity in alignment. There's the trigger. This is the resistance, and your stop still needs to go up here. And then you're going to this, the liquidity that's sitting below us here someplace. Target. Okay? And then this, value area low. So I'm not saying it's pretty. I'm just saying this is just trading, you know. Wish it was kind of nicer. Let's get to real time. What are we doing here? Okay. 20. Okay. So low of the day is here. We got our value area low. We're still in balance. Don't forget we have FOMC. The markets may or may not go further than this, or we may just balance out. That part, not my job. But let's see what I know. My outside edge is here. This is resistance now. This might be too low. It's support. I'm going to mark it for you. Variable high volume node. I'm going to come up and look at your questions. I'm sorry I can't see them while I'm doing this, but I want to get into a live narration. And if you're interested in this live narration, in the Trader Lab, in the library of webinars, I've got live narration in there up to 5 hours long, full RTH. So if you're inclined. Sam, the trend is not up at the moment, unless it's in your time frame. Wife of the Wolf? Oh, hello from South Africa. Well, hello to you. How can you read this chart? Please, anyone help me. Come to Trader Lab. You can learn this. The yellow areas, the red and the yellow. I'm getting a question from the Baron of Julius. That's interesting. Do the red lines mean we're going to break through, and the yellow areas we're going to recheck? The red lines. Are you asking about the micro composites, the higher time frame? Or I don't see. So this, see the liquidity up here? Back to the opening swing. What are we in? Something called balance. So is the trend up or down? Well, in my little world, in my fractals, it's shorts only here. So I don't have longs. I have shorts. Now, other traders can trade long, short, and stand on their head. It doesn't matter. The answer, and even for you, my good friend, Sam, is edge. If you can't extract a probability, no matter what you use, even a magic 8 ball has winning trades. We had one on the trade desk, and you know, the problem with the magic 8 ball is sometimes a trader would want to throw it at somebody, or you know, or the monitor, but because it was very high stress. And as you guys know, you know, I used to work with a group of traders, and it was really in fact, what I decided when Bookmap asked me to do Trader Lab, I thought about it like almost like a virtual trade desk. And it's not that somebody has a right or wrong anything. There is no right or wrong in trading. It's only maybe. But the business of trading is not saying a trend is up and the trend is down, because in your time frame, anybody, and this is not specifically addressed to anybody, if an indicator tells me the trend is up, I can tell you, been there, done that, the trend is not up. Unless you're in this. Then this, if this is how you define trend, yeah, then the trend's up until the trend's down. I don't know if you can operate in that. I don't. I operate because I need range. So I trade, and there's other traders that trade different, you know, there's not a right or wrong. If you can't measure it, And the way this works, and I'm going to suggest this, it's not an absolute, because it's an individual's truth. The market is random in the sense of what it's going to do at any moment, whether it's news generated or just participant behavior, algorithmic, all these other things, icebergs, whatever, liquidity bumping around. If it's random, we have to know that when we participate, we have an edge. Indicators, and most of us put on, as much spaghetti as possible to create certainty because of our fear. And we are wired to avoid risk. So our natural inclination is to seek certainty. If the casinos could have certainty, they would not need to pay the gamblers. They have to pay the gamblers, so we have to pay also. But they only play games that have an edge that favors them. So if they execute their edge, they extract dollars from the gamblers over that random distribution of outcomes. Well, how do we get an edge? That's in my primer webinar. It's got about almost, I don't know if it's 32 or 33,000 views. Edge is created by anchored inputs, not variable random inputs. The market or participant behavior is the variable. The trades have to be anchored so you know when this condition shows up, what is the probability of coming here in this condition? Do you have an edge? How about this? If this is not an edge for you, you don't have a trade here. You're just hanging out waiting for your trades that you have vetted. And your trade might be out here to come back to there and to there. My trade might be right here to come back to there. That's why each trader's job in the Trader Lab is to create a trade plan, and it is really a template that's based on gaming theory. So we're not looking for prediction and certainty because it doesn't exist in the environment. So most retail traders try to solve for something that might not be attainable. I'm always going to say maybe, because if you can find certainty using a mixture of variable inputs, how do you have random inputs in a random environment and have a measurable edge? And you will have winning trades. But I will suggest, potentially, because everybody is different, that that's a losing proposition and you're on your way out of business. It's just not sustainable. And we're all trying to fix and look for sustainability, because when we have random winning trades, we think we just have to make it better. I did that for, 15 years maybe. I don't know. I can't remember. And a lot of it, and I went down every path, every dead end, every idea that I could find. And everything worked. Doesn't matter. Fibonacci, Elliott wave, could have done moon cycles, but I skipped that one. But I'm just saying is everything. And that was available, including trading systems. But I always ended up in the same place. And I always was thinking, that's why I went to systems. I said, well, I could do it better with a system. It'll do all the crunching, number crunching. But it was always the same. So is the trend up or down? Well, for me, the trend's down. For me, it's shorts only, based on context, and I will take stops just like you do. The question becomes, if we all take stops, which means we all pay the other participants, do we want to do it randomly with random inputs, or do we want to do it with anchored inputs so we can develop the confidence to put the trades on and manage our fear, because now we have anchored inputs, and because they're anchored, we can measure the outcome and see if we have a tangible statistical edge. I'm sitting here, and if you're in Trader Lab, you're sitting there, you open your trade plan, you know which trades are qualified in this condition, you know in advance where they might show up, you know what your statistical probability is tangible of getting risk neutral before taking a full stop. And if you have an edge to get risk neutral, that gives you a free trade. And then you have a trade management process also that has a statistical probability of getting you to your target, wherever it is. And then you manage the trade. And instead of being under control of your fear and emotional triggers, which is fear, fight and flight, you can now listen to the noise in your head, that primal wiring that wants to run from the saber-toothed tiger, and instead manage the emotional triggers with tangible metrics. In my opinion, in my experience, and this is not a recommendation, that's the business you're trying to be in. And if you're not approaching it like a business, then you're just playing a video game. And I think, and again, this may not apply to you, may only be me, but you do this for going on 46 years, you kind of get some ideas after a while. And I figured it out, unfortunately, trying to fix what turned out to be a defective process. And that's only me. So think about it. Ponder this concept. Listen to this webinar again. Does it resonate with you? I coined a term called Trader Groundhog Day. That's when you work hard, you think you got it now, and then you wake up in the same place. Well, I did that for, I don't remember how many years. Let me see, 80, 90, I don't know, 10 plus years. And tons of profitable trades along the way. Winning weeks, multiple winners, winning months, but not able to sustain it. Now, I want to be in the business, and I am in the business, because I had to change everything I did. And what was defective, not only my process, but my beliefs. We get a software toolbox. It's got 200 indicators in it. I'm going to ask this astute group of traders, why do you need 200? Does that tell you something? So we spend our lives as retail traders mixing and matching time frames and indicators, adding, removing this, that, and the other thing. You only have a couple of things in life and in trading. You only have a certain amount of time, and you only have a certain amount of assets and equity. And if you're trading something that doesn't have an edge, those dollars are going to go to somebody else who does. That's the thing I want to leave you with today. Now, do you have questions? And please hit a like if you're getting something out of this. Yeah, 805 tile guys, if whatever Powell does, it will change the auction. That's part of anything. It doesn't matter. And as far as FOMC goes, I don't trade FOMC. Why would anybody? It's outsized risk. The book is going to thin out. As far as I'm concerned, I never have to take another trade. I just take the trades that are, part of my plan, and I take whatever the outcome is because it's random. The way, and what I always suggest and share in Trader Lab is, how do you know if you're doing good? First of all, you only take trades that have a statistical edge. And then do you follow your plan? Because the outcome is random. If you have a plan with an edge and you can execute it, which is another challenge, emotional triggers and fear. I mean, think about it. If the casinos deal a hand in blackjack and somebody walks out, and I always like to say a suitcase with $100,000 in cash, do they not deal the next hand? Do they change blackjack to 20 cards because they don't like what happened in the last hand? No, they play the next one exactly the same way. Why? Because that's the only way they extract their edge. So if I have structured trades, how do I measure myself in spite of paying the gamblers and taking stops? Did I follow my plan? The only way I get to be profitable is having an edge, executing it, and my measurement is not the random outcome of any interaction. This is a structured trade from there to there. Do you want to trade this thing? I don't know. Do you just trade it and exit there? Do you trade it and once you have this, you just have a trailing stop up here? Or if you know we have FOMC coming, do you just put it in park, or do you just go there to there? You know the answer before you put the trade on. If you say, gee, I don't know, then you don't have a trade plan. You're just sitting with the gamblers. And I always say, be sure to have the cocktails and get the ticket to the buffet, because now you're just gambling, and you might as well go to casino. Get some tickets to Adele. That could be good. But as far as the business of trading, you need to know what you will do at specific locations, not what the market will do, what you will do. You guys have questions, by the way, please hit the like in YouTube. Subscribe to the channel. If you want to visit the Trader Lab, there's no cost. There's a link in the bottom of YouTube. All you got to do is verify your email so it keeps the spam out, of the Bookmap Discord server. And there's a lot of additional education available at no cost. Large cap, small cap stocks, options, crypto, of course, order flow with a high tier tool like Bookmap. How do you use this? What does this do for you? Does it give you an edge? Well, if I don't use indicators, I guess what I'm doing is I'm just following the participants. What do they say? They are the truth of the market. The auction. Why does the market rotate? Well, what's too high? Well, I know I have an outside edge now out here. If the market comes out here, possibly, and I'm not a recommendation, and of course we have FOMC, so who knows, right? That changes things. We may go from here to there to there, and it's not a recommendation. Let's see what it does. Nobody knows, of course. So let's look together. Now, you got to be conscious that who's going to take new positions here? So we might only rotate into stops, and then we have to see, and this is what's hard about mean reversion. Where's the outside? That's why we call it mean. The outside is over here. So now, and let's look, where are the stops? Now, I'd be looking for a short, and this is not a trade recommendation. Why? Outside in. Now, I know I got through this. I know this is a variable high volume node over here, and I know I've got my full session VWAP over here. Actually, this is not quite accurate. So this is my area to consider, and it's not mechanical. Let's look at this together. We're in balance. So this is value area high. So this is where 70% of the volume was from yesterday. We can, since we're in two-sided trade, still take out the first hour's high and get to the overnight volume point of control. Or here, back to there, and there. I'll see what it does. Not recommendations, okay? Now, if it doesn't come outside, I don't have a trade. I just go, well, that's nice. It's kind of like real estate, location, location, location. You ever heard of that? Well, when it comes to trading the auction, it's about levels that are created by the participants. And to address the idea of indicators, the indicators are not telling me anything because they're following price. What I'm doing is I'm right here. So I can respond to behavior at these locations in a very timely fashion, and I'm going to take the same stops you take, except my stops potentially are going to have much less risk because I can enter right next to failure. So for example, in the microstructure, and this is not a trade, I'm just going to read it to you. There was absorption here. This is resistance right there. Let's just see what it does. I'm not calling trades. I'm just telling you how to read microstructure. Now, if I'm looking at a triggering structure, it's got to be out here, not here. So if this is too high, I can rotate, but it is not a trade. This is the structure. So I want to make it very clear. This is just a trigger. It's not a location. So it's kind of location, 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 and then a trigger. Let's just look at this thing. And this is algo, okay? I want you to see the trigger though. And it's just a triggering structure. In Trader Lab, what you would be doing is you would be isolating behaviors so you could understand the language of the market. Indicators are translators. It's Google Translate. That's fine. But how good is Google Translate at creating your financial future? Do you think that is the answer? Or is it maybe part of the problem? And that's up to you. So the way this trigger would work is you'd be, and this is not a trade. I have to really say that to you. Your short would be here. Your stop would be there. And it's not a trade. It's a trigger. So triggers happen all over the place, and part of being disciplined is knowing that the actual trade is going to be out here, even though this can come back here. But it's not a trade. There's nothing here. But let's just, we'll watch this thing because I'm running out of time. And then we got, the Fed's going to be coming up. And again, you have to ask yourself, if the Fed is coming up, are we going to get new positions? If the market is currently short, then we can squeeze out the shorts who cover in front of the Fed, right? I mean, these are the things you need to be thinking about. So for me, the only location I have to even think about is out in here. But we can look at this little structure here and see if it does anything. Let me take you back to the higher time frame. Please give a like if you like this. This is our consolidation. And this is for my friend talking about the uptrend. This was too high. The yellow lines are retail shopping prices. This was too high. This is too low. This is too high. Day before yesterday. I'm not paying that from down here. Yeah, but it's on sale. Day before yesterday, retail price. What did we do yesterday? That's too high. High of the day, 71.5. So and yesterday was kind of weird because it was shorts early and then we squeezed everybody out, which was a surprise to me. I mean, I don't predict anything, but once we get here, it set up shorts to come down here. Now, if we get under this, which would be a breakout of the consolidation, then it's going to be hasta la vista. Give me a call from the outside. The other outside edge of the universe. This is the target, not necessarily today, not ever, never. We also have this level. So we break out here. The sell stops are under here. This is the auction. This was too low. I got my buyers. These guys were short. They got squeezed. What happened the sellers got squeezed out. What happened up here? The buyers got thrown under the bus. What happened here? We opened lower, selling. Then we came up. The sellers got thrown under the bus. If the shorts get taken out, then what? We can come under here because we take the weak side out. And again, it can do anything. So now we're rotating in here. It suggests to me, and it's all subject to FOMC, and again, I don't trade that, this could be ugly. And this is where, in my analysis of the auction, and it doesn't mean it will, it's not predictive, it's only based on participant behavior. This consolidation, we left it. And that created this. If this becomes a support level, and if I get below here, and here I found buyers, and if I get below here, this is my next level in a higher time frame. This is what I'm looking for. That's a 50-point move or more, and it doesn't have to do it. We can come right back inside and stay in here. So that's what I know. I don't know anything else. I don't need to know anything else. That's what I know. And our next location is going to be out here for potential reversion, right? This is just a trigger. You guys have questions. Hope you're getting something out of this. This is trading the auction. It just is what it is. And it's random, part of the throw. So what do we have here? Let's look. Buyers, you notice we don't have a lot of selling going on in here. Buyers are stronger than the sellers. This is delta. Got a lot of buying here. Now we have to see up here, as we come outside, do the buyers get absorbed or do they stay in control? Because we might just have short covering ahead of FOMC. And again, it's not my job. What happened up here? We fell out of this distribution of volume because we looked like we were going to the moon. This is now my outside edge. Remember, this was support. Remember, we were going longs. Well, once we fell out, now it turns around, and now this is the outside edge coming back here. So the idea here, subject to, not a recommendation, is to get short somewhere out here or not. Maybe we have enough time to get to this. We got 10 minutes. Questions, guys? So assuming you could come to the Trader Lab if you want to get the higher time frame chart. This is Investor RT, which is my higher time frame tool. I've used it. I was trying to look back this, and I think I got it in 2007. I don't even remember. Before that, I was always using CQG. In fact, CQG System 1 in 1985 or 86 was the first one to have market profile. And I learned market profile from Peter Stottlemyre. He created it, CBOT. So, I've been messing around with the auction and it resonated with me, but I couldn't use market profile. And part of it was I didn't really understand how to use it in spite of, taking a seminar with J. Peter Stottlemyre. I still couldn't use it. And I'll tell you why. Because I was still using indicators. So I figured I'd put them together. So what did I create? More randomness. So, you grow, you learn. Unfortunately, I'm a slow learner. Because of randomness, I kept thinking. Now, the thing with this, where's the outside edge? There's no precision. I know it's out here. So anywhere along here, I can get a trigger. And if it doesn't come out here, I just don't do anything. I just sit back. The hard part about mean reversion, which is trying to come back here ultimately, is where's the outside edge. That's why I call it mean. No, actually, this is the mean, but or the mode, but let's call it the mean. And where's the outside edge? So that's what creates the challenge for outside in trading, but it's a specific plan. So it really requires discipline and not being mechanical, but understanding what this means, value area high, and what this means, because we rejected what is above us. Now, there's another piece to this. We took out the first hour's low. We can still take out the first hour's high, because anything is possible. But this is the next location to be stalking or observing. It's not a recommendation. Market, just keep going. That has nothing to do with us. It has to do with what happened here. So we're getting to the location. I'm going to open this up and let's see if we can read it. And this is not a trade recommendation. Everybody takes stops. We don't escape overhead and cost of production, just part of the thrill. So now I'm coming to an area. So I'm going to be watching liquidity. These are algos. And I'm interested in resting liquidity. And I'm out in an area now. I have my sellers here. Notice the change in the delta. I want to watch right in here for behavior. And this is not a trade recommendation. I'm just looking at behavior. This is important location now because I'm in an area. It's not mechanical. So we have to see right here, we see a potential adjustment in behavior. Now I got my buyers in again. You see them? So I got my buyers. How am I doing with my delta? I got a lot of buying here. Buy stops. So we're watching this area. Do I still get buyers? And it's going to keep going. Sellers again. Let's watch. Location. No precision. It's an area of behavior. Let's just watch. Buyers are still doing a decent job. Buyers are still doing a good job. I'm pushing through here. I have to watch. I have nothing to do. I'm looking to see if somebody takes control. Sellers, I should say. Right now, the buyers are doing a good job. So I'm using order flow, and there's no precision. These are areas. Let's see if we can see something here. Now remember, I can take out the first hour's high also. There's approximately a 20, here, watch this here. I think it's about a 27, 28% probability for what's called the neutral day, which means taking out the first hour's high and low. Completely possible. Remember, this is our area to observe. This is important. Let's just watch. Less buying here. More buying. Nothing going on. Buyers are still holding it here. So value area high. I'm running out of time, unfortunately. If you want more understanding of this process, and these are not mechanical. I am stalking a location for a potential trigger, but I have to have the stars align. This is my area. Got to watch now what happens between the buyers and the sellers. I got less buying now. If my sellers take over, then that's something to observe. Please give a like if you're visiting in YouTube. If you want to visit the Trader Lab, there's a link down there. Just verify your Discord email, and there's no cost. I still have my buyers. They're weaker, so we got to see. So I don't have a trade here. I'm in an outside area. And if I just keep pushing, then I just don't have a trade. I just sit back. They're pushing. I have no trade. I'm outside of this. So the trade, no trade. Okay. This is my next resistance area, is up the high volume node, which I think is up here. Variable high volume node. But there's nothing here. Okay. That's it. There's nothing more complicated to this than that, which means it's only maybe. And if you have a trade plan with structured trades, if the trade doesn't show up, you don't take a trade. It is certainly not mechanical. Let me give you a peek here at the Trader Lab, if I can, to show you what it looks like. So I identified the location. This is what Trader Lab looks like, the chat. You can visit Trader Lab. There's no cost for this. You can see I do a lot of narration, ongoing. And I get questions, of course, why would you do this? Why wouldn't you do that? And I'm always focusing on the context, what's important. So I do that. So it's like a virtual trade desk, but I don't call trades. My goal is to educate traders to create their own business plan, but to understand the business they're trying to be in. This is the library of webinars. Thanks, Ned, for doing this. You know, it takes a community, and we're all working together. Trader Lab is advanced trading process. It doesn't matter how long you've been trading, but it will challenge your beliefs, in the sense of what most of us do is does not have edge, so we don't get sustainability, and I think that's borne out by retail trader behavior. So this is where the stops are. Remember, we can come out the top. This is the primer webinar. It's got about 32,000 views. That's a high-level overview. It's about an hour. The next one's Meet the Trader Lab. This is advanced trader methodology. We do a lot of research, data mining to build statistical probabilities, and it's all about trade plans and sustainability. This is a good example. I planned, I saw, I traded, of seeing an A to Z, and there's loads of them in here. I've got over 600 or so, maybe 700 of these webinars, all different processes. Some are rotational, some are trend, you know, all different things. And when they change, see, the thing about behavior in the market is it can get directional and it can go rotational. They're actually plans inside plans. And now this is interesting. Why most day traders, most traders fail using indicators and then being trapped in trader groundhog day, you know, where you have winning trades, but you keep waking up at the same place. Use the link in the bottom of YouTube, visit the Trader Lab. Please give a like on the way out, subscribe to the channel, and visit Trader Lab. It's a great community, and it's for serious traders. It's really something special, and I think it can help you on your journey. Thanks, everybody. Appreciate you visiting the Trader Lab today. Don't forget the like on the way out, and be sure to watch these streams. Feel free to watch this one or access the library of webinars, and then visit Trader Lab. Maybe it'll help you along the way. Thanks again, guys. Appreciate you visiting with me today in the Trader Lab, and I look forward to seeing you tomorrow. Trade well and trade safe, FOMC.